Welcome back to the final session. I hope you have enjoyed the conference so far. This session is titled Transforming Financial Services for Green Growth, and we are pleased to have Mr. Zhang Weifeng, Head of Corporate Sustainability Asia Pacific of the Hong Kong and Shanghai Banking Corporation Limited, to give a keynote speech. Mr. Zhang, please.
Adam, ladies and gentlemen, good afternoon. I'm honored to be here to deliver a keynote speech to start our last session of the day. After a series of thought-provoking and inspiring panel discussions with industry leaders, we will now discuss how we can transform finance services to facilitate the green growth. This topic is appropriately placed at the end because the financial service sector's role is actually to facilitate the needs of other industries. It's also appropriate that we conduct this seminar after the COP26 last month, which, despite the challenges posed by the pandemic, were by far the largest COP ever attended. It serves as a testament that climate change is the largest challenge humanity has created and the one that humanity has to solve. The science says we don't have much time to waste if we want to reverse global warming to level hospitable to mankind. It's clear that at this point that if we do not transform, there will be no future, let alone growth. So how can finance sector enable the transition to green economy? We can do by, firstly, developing financial models that align financing activities with net zero. Connecting science, clients, and finance is not an easy task. But an increasing number of studies, methodologies, and tools are being developed to aid with baselining, target setting, and disclosure. Aligning finance to net zero will not only direct capital to the right activities, but also help to safeguard the stability of the financial system. For example, in the first session of the day, we discussed how buildings and construction industry can transform to be net zero. Climate risk and scenario analysis can help to ensure that the finance project create minimum disruption to the environment and is fit for the future, because it is the only way the project can generate returns to repay the lenders and investors. Secondly, it is important to put together financing structure that incentivize climate action. By doing a robust risk assessment, we aim to quantify the risks and price it into the cost of capital. Green and sustainability linked financing structures can help companies to commit to their sustainability targets. Incentivizing climate action also means being inclusive and enable industry players of all sizes to have access to the tools and capital to transition. This morning, we spoke about logistics and supply chain. It is essential that all stakeholders to work together to achieve this. It estimated that 100 trillion of investment is needed by 2050 to transition the global supply chain to achieve net zero. As much as half of that amount is required by SMEs. Only by helping SMEs can large corporates achieve their net zero targets. Banks are uniquely positioned to support clients, big and small, in the supply chain, and not just through finance. We can use data insights and expertise to evaluate the expected impact of projects and inform net zero risk management decisions. Thirdly, finance can help multiple capital providers, such as development financial institutions, private capital providers, commercial investors, and philanthropy to collaborate in new ways. As transition to low-carbon economy requires innovative technology, finance, too, needs innovation to ensure all sorts of capital is mobilized to green projects that may not be commercially viable on day one. One of such example is HSBC partnership with Temasek on the $150 million debt fund, with which purpose is to catalyze financing of marginally bankable sustainable infrastructure projects in Southeast Asia. To enable the financial services to deliver its role in the transition to green economy, there's one critical ingredient, which is collaboration. We, HSBC, have committed to align our finance emission to net zero by 2050 or sooner, aligned with Paris Agreement. We also commit to provide up to $1 trillion financing investment by 2030 to support the transition. As a global bank with strong presence in many emerging markets, our commitment to transition to economy is part of responsibility, but in the same time, one that cannot be achieved alone. Collaboration between public and public bodies is key to strengthen the information, tools, markets needed for the financial system to support transformation to net zero. This need is critical, especially in decarbonizing the toughest sectors. Energy is a big part in transition to green economy. Transition to clean energy requires a massive investment in renewables and phasing out fossil fuel. At COP26, HSBC announced our public-private partnership with ADB to establish an energy transition mechanism, which goal is to materially accelerate the retirement of coal power plants in emerging markets such as Indonesia, Vietnam, and Philippines. We also joined the Power Past Coal Alliance with 150 other institutions and committed to a just and urgent energy transition. The collaboration among financial service companies is key in accelerating innovation and convergence. All members of the financial service industry need to have a platform to share practices and agree on consistent and transparent approach to transition. For example, earlier this year, we worked with other banks in Finance Service Task Force to produce a practitioner's guide for banks in setting net zero strategy that provides recommended approach and various practical case studies. Together with other banks, we also announced Fast Infra to establish a consistent, globally applicable labeling system for sustainable infrastructure to help to scale up private investment in sustainable infrastructure in emerging and developing countries. Lastly, collaboration across sectors is needed. Within the financial service industry, we need to upskill our workforce across relationship managers, product specialists, risk, sustainability experts, and sector experts. We need talents that with diverse background and perspective to advise our clients and catalyze the change needed. Transitioning economy requires a consideration of the needs of the local community and ecosystem, which require deep expertise in ESG fields, working together for a holistic solution. Hong Kong has a unique advantage on the one country, two systems, where it can play a role as a hub between international and China market. Many global corporations set up its regional hubs here in Hong Kong. Collaborations such as the Hong Kong Green Finance Association and Green and Sustainable Finance Cross-Agency Steering Group will enable us to jointly tackle the issue of talent development, data capability, disclosure standards, and taxonomy, as well as the mechanism such as carbon emission trading. So we can optimally play our part in greening the economy. I look forward to further discussion with panelists today on how we can further transform our financial service industry to support the green growth. Thank you.
Thank you, Mr. Zhang. Please take a seat on the stage to join the last panel discussion. Again, online participants, please use the Q&A box if you have any questions to our speakers. And those who are joining us in person today, please raise your hand and we will pass you the mic. May I now invite Dr. Kelvin Lee Guan, Head of Sustainability and Risk Governance of Link Asset Management Limited, to moderate the panel discussion. Dr. Guan, over to you, please.
Thank you very much. Can I please also invite the rest of the panelists to come up here with me? While you're doing that, I have to say it is a true honor to be able to sit with esteemed experts in sustainable finance. A lot for us to learn. There's been a lot of things going on with COP26 and so forth. My first point, Huifeng, with your opening statement talking about sustainable financial services facilitating ESG green growth, I may argue that financial services has actually accelerated green growth, especially with the onset of TCFD a couple of years ago. Look at where we are now. So financial services absolutely has a key role in expediting, accelerating ESG growth, not just in Hong Kong, but around the world. I would like, at the end of this session, what we're trying to do here is to give the audience a good understanding of some of the key emerging near-term green growth issues that we can consider. And we're focusing on near-term because that will help us identify what we may be doing quickly. The last thing I'd like to also get this panel to help elucidate is give some ideas into how organizations might get started on this journey, or people that have already been on this journey, how do we move even further and faster in the realm of green growth? So those are the two hopeful takeaways that we get from this session. Before I begin, I'd like to give a quick opportunity for the panelists to introduce themselves. Let me first start with Yasmin.
Hello, everyone. I'm Yasmin, and I head the Sustainable Finance team for Asia Pacific at Société Générale. I'm also co-chair of the Sustainable Finance Working Group, which is a working group recently established within the European Chamber of Commerce. Thank you for the opportunity.
Huifeng, would you like to add more?
Hi, everyone. My name is Huifeng. I look after the corporate responsibility function within HSBC in the Pacific. I work closely with our wholesale banking units to promote sustainable finance within the organization. Thank you.
We have Leonie Kelly.
Thanks, Calvin. My name is Leonie. I head up Sustainable Investing Consulting for Auger Global. So we work with our clients, asset managers, asset owners in Hong Kong and internationally on sustainable investment. Thank you.
And Pat Wu.
Hi, I'm Pat. I'm from KPMG. I head up ESG in Hong Kong and also global co-chair for sustainable finance.
Thank you. So Huifeng, I want to build a little bit more on your opening remarks. One thing that I zeroed in on is that you mentioned the word collaboration at least 5 times. Counting, right? And I wanted to see whether, can you elaborate a little bit more on how important collaboration is, specifically on some of the green growth issues that we may need collaboration across different industries. And then if you may, can you perhaps identify the 1 or 2 key ones that would be prioritized that maybe we should all be looking at right away?
Thank you, Kelvin. As I mentioned, for financial institution, in order to achieve our net zero targets, we need to deliver through clients. Right? So collaboration for a bank means that if you want to really commit, to reduce scope 3 emission and reduce to net zero by 2050, you have to deliver through clients. So collaboration is a must. So a lot of banks commit to net zero now. Like we have Glasgow, like GVANs, like so many banks sign up. But a lot of banks are still working on the short-term and medium-term targets, how to achieve that. And then we are in discussion with multiple stakeholders, including our top clients, to help them to work on the transition plan and then co-create sustainable finance or transition finance solutions. So that collaboration is a must. Another observation I see is the most multinationals, a lot of multinationals commit to net zero, and they are working on their net transition plan and engage their supply chain. And a lot of them, the supply chain is here in Asia, to green their supply chain, to manage their Scope 3 emission. So how bank can support these companies to engage their supply chain? International bank like HSBC is well positioned in this to provide sustainable linked loans, sustainable trade finance solutions. For bigger company, of course, DCM solutions, so the green bond and the sustainable linked bond. A lot of product innovation is now like booming. So collaboration between bank and customer, and also, as last panel mentioned, governments supporting the SMEs as well through various source of funding. So that's very much needed.
Thank you. And if I step away from the finance sector, go a little bit wider, talking about recently, we've talked about Glasgow COP26. Pat, can I ask you perhaps to share a little bit on any of the recent developments in COP26, again, that we should all be aware of? What are the key takeaways that companies and corporates should be responding to?
Well, I think, what I thought was the key announcement was the setup of this organization called ISSB, which is the International Sustainability Standards Board. And they have already issued 2 prototypes as to what reporting in this non-financial reporting space will look like going forward. So what we had before was financial reporting over here, ESG reporting over there, and there wasn't really a correlation. And there was a lot of studies done to say that, well, what you're saying in the ESG report really doesn't reflect in your financial statements and vice versa. Now, what ISSB is really doing is bringing that middle ground into play. And for anybody doing financial reporting or annual reporting, they'll need to get a lot closer to what's happening in the ESG reporting space. Because I think, in the past years, what we've seen is ESG reporting was predominantly done, at the comms level, and the finance team, or the reporting team wasn't that involved. But I think that is going to change. It's going to be a lot more standardized. There's going to be a lot more comparability. And with that, stricter standards, stricter auditing of that information is going to come.
Thanks, Pat. And moving over to Yasmin and Leonie, both of your organizations work very closely with clients, either managing their assets, advising, and so forth. Before we get to how you engage with your clients, can you tell us a little bit more about how both of your organizations have transitioned, shifted, or evolved in line with COP26 and in line with ESG reporting standards?
Sure, I can jump, and maybe Leonie can complement. So from our side, and actually I very much echo what we think has been saying about collaboration. We as a bank really believe on the role that we can play in the sustainability and our common objective, but also on the alliances. And I think this is very important. It's not about communication, it's about building together a sustainable future. So pledging to the Net Zero Banking Alliance was something we were keen to pledge on. But what does it mean for a bank like Société Générale? First, it means that we will pledge for carbon neutrality by 2050. It means that we need to cut our emissions on our own operations, but also on our clients. On operations, it's very much like any other corporates. The buildings, travels, the energy efficiency, the IT system, etc. But when we are FI, the big elephant in the room is our Scope 3, as you mentioned, is our portfolio of clients. That means we have two avenues and 2 parallel avenues to look for. First one is about our credit portfolio, how we can align our own credit portfolio with our objectives of carbon neutrality. That means that banks like ours are setting targets in terms of reducing our exposure in carbon-intensive sector as priority, coal, oil and gas, shipping, cement, etc. That means as well working together to set standards. We were, for example, part of the Poseidon principles in the shipping to come with some trajectory on how we can reduce and help our clients to decarbonize. In the steel industry, we are doing the same, working with other players on how we will reduce our exposure in the steel and what will be the most pragmatic and workable trajectory. Then, beyond the grid portfolio, obviously, energy transition is coming also with huge opportunities in terms of developing new technologies, developing new ways of doing business, and to bring value to our societies. So, concretely, it means developing new project finance ways, for example, renewables, where the bank has been leading the way for many years, and the idea is now to continue to accelerate. But energy transition is not only about renewables, it's also other chain of values, actually. We have hydrogen, we have the EV value chain, and we need to be able to help our clients to decarbonize. Here again, collaboration is important because we will work with our clients, with industry players to come together with solutions. Then just on a couple of last points, I would say, embedding positive impact and ESG in all our businesses means as well having training and capacity building. And I think this is something that everyone, consultants, audit firms, corporates, universities, banks, we are all having the same challenges. How we can increase the ESG knowledge in that space. So in our bank, we are very much investing in training, in raising awareness, making sure that we can work with the resources we have and we can help them as well to be able to help our own clients. Then the second point, which is also very much overarching everything, is the corporate governance. And I think here the tone from the top is very important. In our bank, the CSR office, our Chief Sustainability Officer, and we have appointed a new one very recently, is reporting directly to the management, to the general management of the bank. And I think this is important because it shows how strategic is the topic now. I will pause here and maybe Leonie.
Thanks, Jasmine. I would certainly echo, from my perspective as well, collaboration is really king in driving sustainability momentum forward. I would say collaboration that's also strategic for your business too, and trying to understand, where you are joining these initiatives. Why are you joining these initiatives? Because I think certainly in COP26 and over the past few years within the ESG market, if we call it this, we've seen a proliferation of different alliances, the net zero initiatives, for example, social initiatives. And I think it's very important to first understand as a corporate or as an institution, where is it that you can add value within these alliances and why are you joining them? What's the difference that your organization is going to make? Because it is about walking the talk. And delivering on the expectations of these alliances. So for OGA, for those of you who don't know, we are an offshore law firm, and we also operate OGA Global, which is the business that I run under Sustainable Investment Consulting. Our approach to driving sustainability forward is really three-pronged. So we do that as a firm, locally and internationally, as a business, so our own firm footprint. And we are one of the first offshore law firms to actually join the Net Zero Lawyers Initiative. So similar to having the banking initiative, we also have the Lawyers Initiative. But what does that mean? That means that we as a firm are committing to, for example, the SBTI targets, Science-Based Target Initiative, and how we're going to transition our footprint and how we work with our clients to being sustainable for the long term. Secondly, we're also developing ways within our legal business, the ESG legal side, to work with our clients on ESG legal advice. So supporting our clients with fund structure formation, for example, and looking at, for example, the implication of your disclosure requirements and what that may mean for fund setting up prospectus, as example. On the third pillar, it's very much around how do we serve our clients to really integrate ESG and impact factors into their businesses. So we primarily work with asset owners and asset managers, as I said earlier, helping our clients really understand, A, what is your strategic goal here? What's the vision for the business? And how do you deliver on that vision? So helping to set and formulate your responsible investment strategy. Is it that you are a PRI signatory? And we spoke about this earlier. For us, a PRI signatory, for example, maybe the first step, and helping this client kind of walk that journey and understanding that this is not just about regulation, although we do support on regulatory compliance, it's about really driving fundamental business value and driving those ESG factors in the business.
Pat, would you like to add on to this as well?
Yeah, I just wanted to share that. I mean, you have banks and you know, Leonie works a lot with asset managers. And also there is this zero alliance of insurance providers, right? And I mean, BEC, you guys have been at this for a long, long time. But I'm sure that you have also seen seismic acceleration in the interest in ESG and sustainability in the last couple of years, predominantly because of all the capital allocators, the asset managers, the banks, and the insurance companies really, really pushing this now. So any kind of company that needs capital will need to go, or need to do business, need to go to these three sectors. And so from that perspective, you know, this move into that capital space and ESG integrated into capital allocation decisions is what is driving this significant change in how the market sees this space.
Thank you very much for that one. I want to pause here just to see if there's any questions from the audience, either online or in-house. Check here.
Hello, my name is Michael, and I'm a student from City University of Hong Kong. My question is related to ESG investing. So actually ESG investing that's happening right now is heavily focusing on the technology sector, which without much effort, technology company will have a less carbon intensity compared to companies at other sectors. So how do you guys think about these kind of practices, and how can financial institutions create even more actual impact to the ESG development? Thank you.
Maybe I'll just quickly. I think there are many strategies in ESG investing. So it's not just thematic. Thematic as in, you know, your renewable energy or new technologies that is, you know, driving net zero or whatever. But what we are seeing as a major growth factor in the asset management industry is ESG integrated investments. So basically, you may be kind of like completely sector agnostic. You may even be investing in a fossil fuel company, but a fossil fuel company that is transitioning quicker than somebody else. You may be still in the aviation industry or automotive, but somebody who's doing better at ESG than somebody else. So I think that, you know, that's where the growth is. It's not just thematic. And there's a report that comes out from the Global Sustainable Investment Alliance, GSIA, every 2 years. And the 2020 report came out in, I think, July or something this year. And you see that the biggest part of that is ESG integrated investments. I think there's about 35 trillion in total in ESG integrated investment. But not a very big portion is what you're calling, you know, just the thematic stuff, or specifically on the tech, so specifically to renewable energy or whatever. So I think that there are many multi-prong approach, and the asset management industry is really advancing in this area.
Just to pick up on that, maybe completely agree in kind of that spectrum of sustainable investing strategies. But I see certainly technology, you're right, is a growth area, but perhaps an ESG investing technology is a foundational pillar and a building block actually to support all these different strategies. And I think that's certainly where in 2021, for example, AI and the purpose of AI in ESG has grown massively in terms of how can we improve and overcome some of the data challenges, for example, that we have in the ESG market today. And this is where AI is driving forward and helping us to solve some of those problems. So I think this is why we're also seeing perhaps a growth in investments going towards the tech-enabling sector for the ESG market. I think actually we're running a parallel, or speaking to a parallel conference today, AI in ESG, which is a 2-day conference just focused on that exact topic. So I think it just goes to show that it's a huge issue today.
Thanks. So, Leon, that's a really good point talking about data. And one thing on the financial services side, when we're talking about sustainable finance, different instruments, is this whole issue of reporting progress, charting where we are, where we're going, and even setting targets. Can anyone on the panel talk a little bit more about how we might be able to improve the quality of data? What are some key features we should be looking at? Are there any solutions that can be considered when we look and manage ESG data?
Want to go first?
Yeah, I can just, maybe just a comment here. I think today we do have data. What is complicated is the comparability of data. So in order to, to be able to work with this data, we need to, at least from my perspective, we need to have a push from the regulation side. First, we need to have one common language, and I think it's important to see international standards coming here. We have, for example, the different reporting standards that we see in the new era of nature-based solutions and all about biodiversity. We see, for example, SBTN, etc. So all those standards are important to help us to have a sort of comparability. Second one is about raising the bar and having a convergence of the level of exigence, I would say, the level of requirements we would have, in order to be in a I would say, level playing field altogether, and not to have a fragmented the regulation. So from my point of view, I'm very much keen to see more convergence of regulation around how we could operate the data and make them comparable, all the more in a global market where investors can be in Europe, investing in Asia, and vice versa. So it's important to be able to work in this globalization.
And I think that is happening. I mean, as I mentioned before, with ISSB being set up, that has already incorporated in their SASB, and then also the Value Integrated Reporting Initiative and some other standards. So there is the reporting standards are converging. There is work being done in harmonizing the taxonomy between the EU and China. Where I see all the regulators in the financial services industry globally are really getting behind TCFD. So whatever they're asking is very TCFD-centric. So I do see that convergence, and everybody has been saying that we need more comparability. And the more people that say that, then the market will move in that direction, which it is moving in that direction.
Yeah. And just on the comparability, something interesting as well was the common ground taxonomy. We know that China and the EU has been cooperating, and actually the first phase of the result was coming with how we could compare both taxonomies. And I think this is an important step in the exercise of the operability of taxonomies. Here it was about the green investments, but again, it can be easily replicable to reporting and to data, etc.
Yeah, certainly I think we're also seeing that locally reflected here in the Hong Kong market. If we look at some of the regulations that have come through only in August of this year by the Securities and Futures Commission with the climate-related requirements for fund managers. And it's certainly nothing that's unique to Hong Kong. This is something that we've seen develop across other jurisdictions, from the EU Sustainable Finance Disclosure Regulations to talks of increased regulation in the US, for example. So there is certainly momentum in increased regulation. I think for these regulations, there is a similarity in some of the standards perhaps that are being suggested to be followed. And as Pat mentioned, the Task Force on Climate-Related Disclosures is one. And I think that's also in recognition today. We do deem climate risk to be financial risk. And that is also why we've seen such a focus on the carbon markets and the environmental factor. But tomorrow, we will probably see the focus on nature and biodiversity, and we've seen that mentioned at COP26. So this is why I say earlier, it is very important as a corporate to understand first, where is the material risk exposure within your supply chain? It can be across E, S, and G, but obviously there's different levels of that exposure. So it's to pick the right frameworks that work for your business as well, I think is critical here.
Thank you very much. There's a couple of legal questions that I'd like to ask, but let me hold off on that first. Hui-Feng, I want to come back to you. Again, coming back to this whole concept of collaboration, we've heard from the other panelists of all these emerging issues that we're dealing with. We've heard about TCFD, which is a couple of years well established. We just heard about TNFD. We've heard about nature-based solutions as well. A lot of this can be very daunting, especially for corporates and organizations that are just getting started onto this. But you've been able to share that in your role and also HSBC, how you guys have been part of developing these methodologies. What advice or recommendations would you give to corporates just getting started on this? Should they be part of these approaches? What advice would you give them?
So one suggestion I would give is don't wait for the customer or your customer to push you or regulator to push you. Actually, for medium-sized or SMEs, actually, you need to start disclosure and really build that competitive advantage in the low carbon business model or product. So our observation is right now, as I just said, multinational companies, they are more sophisticated, access to capital is there, and they are setting up science-based targets and then defining this roadmap to net zero, like all these. But for SMEs, they don't have that. Firstly, knowledge base, but also the expertise and funding. So how can SMEs can really catch up and really build that competitive advantage? Start to disclose, right? Like if you look at CDP is promoting this new scheme, SME scheme they launch, right? Start to engage with the customers. And for a bank, we are also actually working with some of the multinational companies, in particular some of the sectors who are really rely on their supply chain scope 3 emission to capture the scope 3 reduction opportunities. For example, retail industry, about 80 to 90% of the emission reduction opportunity rests in the supply chain, right? So how the bank is working with multinational, like big retailers, to green the supply chain, but we are actually developing financial solutions to help companies to engage supply chain all the way to the supply chain, the SME suppliers. So for SMEs, you need to think about how they can capture the opportunity to build that competitive edge, the advantage, by starting to disclose carbon emission and then think about innovation, green innovation, to really build that the edge to capture the opportunity, because the customer, regulator, and all pushing your customer, they're all pushing you to upgrade.
Thanks, and so this is a perfect transition over to the legal side, right? So we've heard a lot about organizations can take the initiative, volunteer to do this, start measuring and monitoring, and working with financial institutions. Leonie, I'll come back to you on this particular matter. Do you think will we start seeing ESG being incorporated into contracts? So it's something from the legal side. Are there instances of that? How might the legal sector help to advance and accelerate ESG?
Sure. Before I'll start, I caveat with saying I'm not a lawyer. I'm an environmental economist, so I don't represent the law firm. But in terms of what we've seen, I think in the legal field, yes. We have seen fund prospectuses obviously integrating ESG factors and how they're going to deliver upon those in prospectuses and PPMs. Actually, that's nothing new. So it's how are those now being monitored and managed is fundamental. And I think the point you may be getting at is also greenwash, because it is very important to see this development of taxonomies in the market, because these taxonomic frameworks, whether they focus on green or social, they're basically giving us the guideline as to what is green and the different shades of green that can exist in a market. And I think that architecture that's being developed will certainly hold us to account as individuals, as organizations, and products in the market. And we also can see, over the past year or so, increased litigation around climate action. And in fact, that's the very topic I'll be speaking at in the morning, if anybody is keen on that, with 4 lawyers across the APAC region. And we are simply exploring across mainland China, Japan, Australia, and Singapore, the increased litigation world around climate. And I think this is something that we're seeing in 2021, and we will see increased litigation moving forward as the market starts to understand green and social taxonomies and has, I suppose, increased recognition of standards in the market too.
Thanks, Leonie. You touched on the keyword, greenwashing, and that's something that that's starting to happen. I think for me, personally, being in this for about over 10 years, I would take a provocative approach and say, I actually welcome the greenwashing. Because in a sense, if I compare where we were 10 years ago, even 5 years ago, there weren't many companies looking at ESG. There weren't many companies really caring about sustainability. But now with this, with the acceleration of uptake of ESG, we're seeing more companies greenwash. But to me, that also shows that companies see the value in doing this, that they're doing a lot of advertising, marketing, promotion, and so forth. How might the panel here react to greenwashing? Specifically, how do we help reduce this further? So you've talked a little bit about measuring and monitoring, but are there other processes that we should be considering to reduce greenwashing?
So if I look at sustainable finance, for example, this is a market that has been growing very rapidly. So we've seen some cases on the market. For a market like this where volumes are huge, you may have some cases. But we have seen also, and actually it's a market which is shaping itself, and the market which has been coming together with players putting together some standards. We've seen the EU taxonomy and other taxonomies in other regions, etc. So I remain optimistic. I think all those standards that have been developed over the years have been helping to make the market much more robust. Hence, as well, the need to continue this collaborative action all together to make sure that we raise the bar on the standards and taxonomies. We convert the standards so that we are all in the same, again, level playing field. I think it's important, and to make sure that we build confidence and the investors feel confident. Again, if you are talking about European investors coming to APAC, they need to be confident on the investments when they will put the money in, and vice versa. So I think the market is going in the right direction, and standards and taxonomies are here to make sure that we make a robust and credible market.
Yeah, you said maybe I can just add. Actually, we talk about collaboration, but avoid greenwashing. Actually, need collaboration here. Yes, for a bank, if a structure now the sustainable finance product is just booming. There are so many like SLL and or the SLB, like even in the debt capital market. But bank rely on standard, global standard, and it's really reputable, global recognized standard to really make sure that the lending is stick to the highest like ESG standard. So in every industry, most industry now, there are certain ESG standard, like textile sector, the HIG index, we have the palm oil, the RSPO, and all. So the bank are relying on this certification service provider to really make sure our lending have the reference to the highest ESG standard. So that collaboration is badly needed.
Well, I just wanted to also add, I mean, ESG data is, or disclosure is really shifting capital. A lot of people are relying on that information to make investment, lending, insurance decisions. So, it's causing real money to change hands depending on that information. So, from a legal perspective, that is a lot more ramifications around that. If the data that somebody used was incorrect, that caused them to make certain investment or lending decisions, I think that there will be a lot of repercussions. Now, what I've seen globally is that it's been very loose how there is kind of just verification or assurance of ESG-related information. And I don't really feel that globally there are proper regulators looking at this. But I think that hope with ISSB coming up and with this increased focus in standardization of disclosures, that the robustness may not be this, as robust as financial audits, because like for a firm like KPMG, we get checked like 5-6 times a year by somebody to make sure that we're doing the right thing and going through everything. But I think that at least you need to be checked once, and that's not happening at the moment. And so I think that over time there needs to be a regulator that is managing this non-financial reporting space, because it's causing decisions on how people invest and how people lend.
I think one point as well is, again, ESG capacity building. The more people will be knowledgeable on the topic, the less mistakes will be made on the market. Hence, again, the need to increase awareness, increase training within the banks, within the investor space, within the different communities, actually, within our own supply chain. Again, collaboration is important. Having a corporate discussing with their own supply chain, the SMEs, trying to build together some seminars, some specific trainings dedicated to industries, to some segment of the market, to help, again, the players to get up to speed on those concepts which are today important and will become tomorrow mainstream, part of our daily business. So this is not something that can remain aside or can remain as a topic for a few experts within the community, but they need to be embedded within all our businesses, all our activities.
Yeah. I completely echo that. I think it is, each and every one of our responsibility to be educated on these topics, right? And for OGA as a law firm, we're also training all of our lawyers on climate risk. And I think we've seen this echoed across the Big Four, making certain goals around training of staff and across the banks as well. I think training and increased knowledge to recognize issues around misstated information is critical and fundamental. And I think it's also important to recognize this is not just greenwash. There's also the younger sibling here in the room, which is the social wash as well. A lot of our focus, again, is on E factors. I think it's also important to recognize the social dimension as well. So I think greenwash and these issues coming to fore will be solved, as Pat is suggesting, by increased standardization, increased regulation, but fundamentally that involves collaboration around the table. And I think for me personally, having worked in this industry for a very long time at this stage, I think one of the biggest things that I've seen in my career is the sitting down of the Global Reporting Initiative alongside SASB to communicate and collaborate. I think for me that was one of the times when we saw that this market is actually willing to move forward and collaborate to make change.
Thanks. So I'd like to remind everyone that the title of this particular presentation is Transformation Financial Services, right? So a lot of what we've talked about is TCFD, climate-related, carbon, energy, and so forth. But we've also heard a few words, social, we've heard impact, we've heard nature-based. So what I'd like to do is transform this discussion a little bit and head towards those areas, because it seems like the whole issues of ESG, the issues that we focused on so far are relatively small when we take into account the emerging issues that we may be looking at. So can we have a little bit of discussion? Perhaps I start with you, Yasmin. You mentioned nature-based solutions. Can you tell us a little bit more about what that means? What are we expecting from this?
So I think this year has marked an important milestone in the ESG space where different stakeholders understood the importance of nature and preserving biodiversity. And both topics, climate change and actually protecting nature, are both the unique challenge, and nature can be the solution to capture carbon. And I think COP26 has strengthened this I would say this assumption, which is very important in the way we will look at the business going forward. So that means that we need to have a different view on how to assess nature, on how to assess the impact we have on nature and the impact of nature on our business. So we've seen, some new businesses coming, like nature-based solutions, where we will be looking at financing projects where, for example, carbon certificate can be monetized to finance those projects which are generally not necessarily cash flow generating projects. This needs as well change of business models, change of mindset, of standards as well. We welcome TNFD, for example, which will help also in that sense. So yeah, biodiversity is a big topic. I think the banks, our corporates are making huge investments today. We've seen many investors coming to the market, having, for example, dedicated funds or having specific funds that, dedicated for biodiversity. But maybe, if you have, I don't know whether you have some examples of biodiversity investor fund, but clearly, we have seen AXA, Mirova, etc., trying to push on the subject. Maybe on the S of ESG, COVID has been crystallizing the need to invest more on the S of ESG again. So we have seen increasing demand for financing healthcare system, digital inclusion, which we have seen at the end, where we are in a COVID situation, we need to have homeschooling, working from home, etc. So having access to internet is important. So actually we see different aspects on the S that needs to be invested. And I think today we are talking a lot about fair transition and just transition, how we can do this change and how can we transform to a greener future while making sure that the impact, we will reduce the impact on the society on the negative way, obviously. So I think, yes, for the next coming years, I see the S clearly being one of the focus in different avenues of financing, like social securitizations, etc., but also the biodiversity topic.
Maybe on my side, in relation to biodiversity, I think where I personally have seen an increased number of transactions and investments is perhaps more in the impact investing strategy. So looking to allocate capital to perhaps ventures that have a specific biodiversity goal. For example, it could be an ocean alliance fund looking to increase technology investment in shipping technology to reduce pollution. It could be around seaweed farming, for example, as an alternative feedstock to cattle to reduce methane. I think we've seen a proliferation of these new technologies being investigated and harnessed under the target of biodiversity. But for me, I used to work in London Zoo exactly on that, on biodiversity investments. And I think it's very encouraging to now see that nature is recognized and the biodiversity risk exposure that we as corporates have externally on the biodiversity world as well. And also to try and price that risk into our supply chain and how we operate as a business. I think one of the other interesting things, we talk about targets on environmental and carbon, but it'd be interesting to learn how many of you here in the room have heard of the Aichi Targets.
You're introducing another set of targets for us to
right.
consider.
If we have a biodiversity goal as a corporate, we need to know about those. All right, everyone knows about the net zero goals, SBTI, not many of us know about the Aichi Targets. And those are already a framework that we have in place that have been spoken about by the Convention of Biological Diversity to actually transition us to meeting certain goals. So we don't need to reinvent the wheel, is what I'm saying. Let's look to what we have and collaborate around these frameworks already.
Just want to add, about these nature-based solutions. And I think that the carbon market is going to play a critical role in making these nature-based solutions bankable and financially viable. I mean, you're already being able to buy these credits, carbon offsets based on mangrove preservation, afforestation, reforestation. A lot of these things are happening in China as well. And so, I think that it is monetizing that, preservation, as it were. Rather than people chopping things down and making farms, it actually may be more financially viable for them to preserve that area and create those carbon offsets. We're seeing those the carbon market really moving quite a lot with the EU emissions trading scheme per ton. I think it's around 70 euro now. So that's 10 times from like maybe 3 years ago. And China coming out with their own emissions trading scheme this year, currently at 50 RMB a ton. Australians at 18 Aussie a ton, and the US at whatever, I don't know, California, I think it's a couple of US dollars. So you're seeing all of these different pricing, but as the carbon market becomes a bit more mature, and we're hoping it to be more fungible so that these credits can actually, there's a proper kind of like pricing on carbon. And I think that, nature-based solutions and preserving nature will have a big role to play in creating this market.
Thank you very much. I'd like to, again, open up the floor for any questions, if there are any.
Hello. First of all, thank you for the fruitful discussion that you guys had. My name is Laila. I'm also from HKU and also working at the German Chamber of Commerce. I actually had two short questions. One was kind of already answered by Yasmin. It was about COVID-19 and how it is maybe driving investment houses to improve the ESG. Like I said, it was already kind of answered. But the second question about carbon offsetting. So carbon offsetting could also improve the portfolio of a lot of companies. But then there's also the opinion that it might be a flawed incentive and it could drive people to offset more, to emit more carbon than they should. So maybe a question to all of you, what your opinion is on this. Thank you.
Any thoughts on carbon offsetting, the challenges with that, the verifiability?
Well, I think that, I think that definitely technology needs to be at play to make sure that that transparency, traceability is available. And I think that, technologies like blockchain and tokenization is probably potentially some of the solutions in this area. Now, whether it's a cop-out, I don't think so. Because if it's able to stop people from chopping down the rainforest or chopping down stuff and destroying habitat, that is always positive. The second thing is that if you're looking at science-based targets, you cannot meet the science-based targets by buying offsets. So if anybody has signed up to science-based targets, you have to actually absolutely reduce. So, for KPMG, for example, so we had our science-based targets approved, I think, yesterday or the day before, internationally. And so, that effectively means that we have to absolutely reduce our emissions by 50% by 2030. But we've also committed to being net zero in 2030. So what we'll have to do is to absolutely reduce by 50%, And for the remaining 50%, we'll be buying offsets to offset that. And that's going to cost money. And if it goes the way it is, right, with 70 euros a ton in Europe at the moment, we're budgeting for these now. And I think the more expensive it becomes, effectively, we just need to reduce more. The more we reduce, we're double saving, right? So that's my answer.
So Pat, are you recommending us to invest in the carbon market now, right?
I think it's a very interesting asset class.
I fully agree with you. I mean, so for HCP also means that we commit to 2030, right? Net zero, our own reduce our own operation emission to zero. We have a 3R strategy. One is, as you said, reduce. You have to reduce on it, and then replace the brown asset with electricity with green. I mean, we are implementing some project, but in Hong Kong it's a bit challenging. But Richard, we have partnership with in our data center, TKO. We did set up put up the solar panel on top of it, but it's just limited space. It's a very fraction of the emission we stay. But then the third R is remove. So we all committed 2030 net zero, right? Eventually the residual amount will have to be removed actually by carbon offset solutions. So I totally agree with you. Reduce is the number one priority actually.
Yeah, actually I very much echo that. It's important that we recognize the need of having a credible transition. And credible transition means trying the best solutions in terms of investing to remove carbon. And offsetting should be seen as for the very hard to abate emissions, the ones that you cannot remove thanks to the different technologies in place. Something interesting recently, we've seen in COP26, there were a lot of discussion around Article 6. And I think this was the main win at the end. The COP26 was a little bit modest in terms of results, but there were some wins which we need to celebrate. And this one is part of it. And Article 6 was focusing on how we can have a global governance and framework around carbon market, around how we could avoid the double counting. And I think this is important. This is important to make the market credible, but also make it more compliant. So we'll see more details coming on this article and how it will be implemented. But I think we are coming in the right direction here in terms of how we should use carbon offsetting, again, to preserve the integrity of the market here.
Thank you very much, everybody. We are running out of time. I want to summarize, or try to summarize, today's presentation. We first started off with that discussion of collaboration, collaboration, collaboration. And we've highlighted that many different times. The key with this is for you to know that you're not in this journey alone. I think that one of the interesting points about this is the divergence in topics that we've already discussed here today. We talked about net zero. Leonie, you introduced Aichi, which we'll have to learn a little bit more about, because those touch on the issues of carbon management. It touches on the issues of biodiversity. And we've also heard about social impacts. Biodiversity, social impacts, in my opinion, will be an even bigger challenge than just the environmental related ones to climate. We've talked about carbon markets. We've talked about the need for blockchain technology, for fintech and its role. And what I'm getting at here is many of you should feel very excited because we've talked about a whole range of topics specific to financial services and ESG. Some of you, like myself, are going to be very concerned because of the issues that we have to begin dealing with. But I think it will come back to this. We have experts here today that can help us along that journey. And hopefully we'll work together to reduce our carbon emissions and hit net zero targets. So please join me in thanking the panelists today.
Thank you.
Thank you to our speakers and moderator for an eye-opening discussion.